Hi everyone, today we'll be going over accounts October-November 2021, paper 2-1, question number 4. This is structured paper 2, which consists question of 90 marks, and it also has a time limit of 90 minutes. And since question number 4 is of 30 marks, we will be attempting to solve this question under 30 minutes. So without any further delay, let's get started. B Limited is a manufacturing business, and the business uses marginal costing technique and manufactures 3 products, S, T, and E. The following budgeted monthly information is available. So we're given the per unit selling price, direct material, direct labor at $8 per hour. So this is the rate. And we're also given per unit variable overhead, and we're given the maximum monthly demands along with the fixed overheads per annum. So that's 96,000. Firstly, we need to calculate the contribution per unit for each product. So contribution is basically the difference between sales price and the variable cost. So we just need to figure that out for these 3 products. Let's make a statement. The first product is S, the second one is T, and lastly we have E. We'll start with the selling price. So the selling price for these 3 products are 30, 43, and 69 respectively. Now we just need to subtract all of the variable costs. So the first one is direct material. And the cost for direct material is 18, 22, and 36 respectively. So we need to subtract this. That's why I'm writing it in a bracket. Now, another variable cost is the direct labor. The direct labor is 4, 6, and 14 respectively. Now lastly, we have variable overhead, which is also considered under the variable costs. Variable overhead is 2, 3, and 5 for these 3 products respectively. Alright, this concludes our variable costs, so we can now easily figure out the contribution per unit. Here, the contribution per unit for product S is going to be 30 minus 18 minus 4 minus 2, which gives the contribution to be 6. Then for T, that's 43 minus 22 minus 6 minus 3, which gives the contribution per unit to be 12. Then for E, that's 69 minus 36 minus 14 minus 5, which gives the contribution per unit to be 14. This concludes the first part. Let's move to the second one. Now we need to prepare a statement to show the maximum monthly contribution and maximum monthly profit that B Limited can earn. So we are already given the maximum number of units for each of the 3 products. So we just need to multiply the contribution and then subtract the fixed overheads from the total contribution. All right, firstly, let's figure out the contribution. So we have 3 different products. The first one is S, then we have T, then we have E. Now let's have a look for the maximum monthly demand. So for S, that's 300, for T, that's 400, and for E, that's 360. Let's list that down first. For S, we have 300, then we have 400 for T, and we have 360 for E. Now we just need to multiply the contribution per unit to each of the monthly outputs for these 3 products and then figure out the total contribution. So contribution per unit was 6, 12, and 14. Let's just write it down. So that's 6, 12, and 14. These are the contribution per unit. So the total contribution for S is going to be 1800, which is 300 into 6. For T, that's 400 into 12, which gives the total contribution to be 4,800. Then for E, that's 360 into 14, which gives the total contribution to be 5,040. Now we can easily figure out the total contribution. That will just be the sum of these 3 amounts. So that's 1800 plus 4800 plus 5040, which gives the total contribution to be 11,640. All right, now we just need to subtract the fixed overheads for this month. let's have a look at the given information. We were given the fixed overheads to be 96,000 per annum. So this relates to the amount for 12 months, but we're only figuring out the monthly maximum profit. So in order to do so, we only need to subtract the monthly fixed overheads. So we can just divide the annual fixed overhead by 12. So that's going to be 96,000 by 12, which gives the monthly fixed overhead to be 8,000. So we need to subtract this. Now we can easily figure out the total profit. So that's just going to be the difference between contribution and fixed overhead, which is 11,640 minus 8,000, which gives the total monthly profit to be 3,640. This concludes the second part. Let's move to the third one. We need to calculate the monthly direct labor hours that B Limited requires to meet the budgeted maximum monthly demand. So in order to figure out the total monthly direct labors, we first need to figure out the per unit direct labor required for each of these three products, S, T, and E. Let's do that. Now we were given that the direct labor was paid at the rate of $8 per hour. So this just means that $8 was given for every hour of labor. So that's $8 for 1 hour. So we can easily figure out $1. So $1 will be for 1 by 8 hour. This is just a simple unitary method. Now we need to figure out what $4 is in terms of the hours. So I'll write it down right here. So $4 is just going to be 1 by 8 into 4 hours, which is actually 0.5 hour. So 0.5 hour is required per unit for product S. Let's repeat the same process for T. We have the direct labor rate to be $6. So for $6, that's going to be 1 by 8 into 6 hour, which is just going to be 0.75 hour. So this is the amount of time required per unit for the product T. Repeat the same process for E. So we're given the direct labor rate to be 14. So that's just $14 is going to be 1 by 8 into 14 hours, which is going to be 1.75 hour. So 1.75 hours is required per unit of the product E. All right, we figured out the time that we require to produce each unit of the three different products. So now we just need to multiply the respective direct labor hour required with the maximum monthly demand in order to figure out the total monthly direct labor hours required. So that's going to be 0.5 into 300 for the product S, 0.75 into 400 for product T, 1.75 into 360 units for E. Let's write it down. So the monthly direct labor hour is just going to be 0.5 into 300 for product S, 0.75 into 400 for product T, and 1.75 into 360 for product E. So 0.5 into 300 is just going to be 150, 400 into 0.75 is just going to be 300, and then 1.75 into 360 is going to be 630. Now the total monthly direct labor hours is 150 plus 300 plus 630, which gives 1080. So this is the number of hours required to meet the budgeted maximum monthly demand. This concludes the third part. Let's move to the fourth one. We are given additional information. Due to a shortage of skilled labor, the directors are aware that only 900 direct labor hours per month will be available. But we actually just calculated in the third part that we require 1080 direct labor hours in order to produce the budgeted monthly output. Now we need to calculate the maximum contribution and maximum profit for December 2021, taking into account the limited direct labor hours available. So previously, while we had 1080 direct labor hours available, we already calculated the maximum contribution and maximum profit, but now we have a limited resource, right? And whenever there's a case for limited resource, we always need to figure out to which product are we giving the maximum resource available in order to earn maximum contribution available. So the easiest way to figure that out is by ranking the products. Let's do that. So firstly, we have S, T, and E. Now, the ranking method always constitutes of the contribution per unit. Let's write it down. So contribution per unit for these three products, we already figured it out in the first part. Let's have a look. And the required contribution is 6, 12, and 14 respectively. So let's just write it down. That's 6, 12, and 14. Now we will divide this contribution per unit with our limited resource. So the limited resource that we're talking about is direct labor hour, right? So we just write down the direct labor hour per unit that is required in order to produce these three products. So direct labor hours per unit. Again, we figured it out above for the third part. Let's have a look. So for the product S, we require 0.5 hour. For product T, we require 0.75 hours. And for product E, we required 1.75 hour. Let's write it down. So that's 0.5, 0.75, and 1.75. So like I said before, we will now be dividing the contribution per unit by the direct labor hours per unit. We can write it down as contribution per direct labor hour. This just means the amount of contribution that we are earning per each direct labor hour. So for S, that's just going to be 6 divided by 0.5, which gives the contribution per direct labor hour to be 12. For D, that's 12 divided by 0.75, which gives the contribution per direct labor hours to be 16. And for E, that's 14 divided by 1.75, which gives the contribution per direct labor hours to be 8. Now we rank these three products in order. So we allocate the maximum required direct labor hours for the highest ranking product. So ranking is always done on the basis of contribution per the limited resource. In this case, that's contribution per direct labor hour. So the first rank goes to the highest contribution per direct labor hours. Among these three, obviously the highest one is 16. So we rank the product T as the first priority product. Then we have 12. So we will be ranking the product S as the second priority product. And lastly, we have E. So that's the third ranking, which means we only prioritize E after prioritizing the products T and S. All right. So prioritizing in this context is that we will be allocating the direct labor hours firstly to product T, then we will be allocating the direct labor hours to S, and then the remaining direct labor hours will be allocated to the third ranking product, which is E. So let's first allocate the direct labor hours. So we have 900 direct labor hours. And we know that for product S, we require 150. For product T, we require 300 hours. And for product E, we require 630. So we ranked our products, right? So the first priority was product T. Second priority was product S. And the third priority was product E. So obviously, we will be allocating the 300 labor hours out of 900. Because that's the limited time. So out of 900, we allocate 300 to T because that's our first priority because it produces the highest contribution per direct labor hour. Next in rank was the product S. So if we already allocated 300, for S, we only have now 600 remaining hours. So out of 600, we can obviously give 150, right? So we give 150 hours to S. So if we subtract 150 from 600, the remaining hour is just going to be 450 hours. So we actually required 630 hours for product E, but we only have 450 direct labor hours available now. So like we figured out before, we needed 300 hours of direct labor in order to produce 400 units of product T. So we can still produce 400 units because we are allocating 300 direct labor hours. For S, we needed 150 hours in order to produce 300 units. And since we're allocating 150 units to S, under this limited direct labor hours, we can easily produce 300 units. But for E, we needed 630 direct labor hours in order to produce 360 units. But now we only have 450 direct labor hours. So we need to figure out how many units can we produce of the product E by only utilizing 450 direct labor hours. So we needed 630 hours to produce 360 units. Now let's apply unitary method. We needed 1 hour to produce 360 by 630 units. Now, if we're talking about 450 hours, we can produce 360 by 630 into 450 units, which gives the total number of units to be 257.14. And since we're talking about units, we need to round it off. So since we cannot produce more than 257, we can round it off to 257 units. So this is the number of units that we will be producing for product E. Now, since we are asked to figure out the maximum contribution and maximum profit, in order to figure out the maximum contribution, we can just multiply the per unit contribution to the number of units produced for each of these three products. So let's first write down the number of units, which is 400, 300, and 257. Let's do that. So we need to prepare a statement like we did previously. So we are figuring out the contribution first. We have three products, S, T, and E. So for T, we were producing 400 units. For S, we are producing 300 units. And for E, we are producing only 257 units. Now we need to multiply it with the contribution per unit, which we wrote down right here. So that's 6, 12, and 14. 6 for S, 12 for T, and 14 for E. So the contribution for S is going to be 300 into 6, which is 1800. Contribution for T is going to be 400 into 12, which is 4800. And contribution for E is going to be 257 into 14, which is going to be 3598. Now we can add these three amounts in order to figure out the total contribution. So that is just going to be 1800 plus 4800 plus 3598, which gives the total contribution to be 10,198. All right, now we will be subtracting the fixed overheads in order to figure out the monthly profit. So there are no changes in the fixed overheads. So we will still have the fixed overheads to be 96,000 per annum, and we're only talking about monthly profit, so we need to subtract the monthly overheads. So that's just 96,000 divided by 12. This gives the monthly overhead to be 8,000. Now if you subtract the fixed overheads from the total contribution, we can easily figure out the total profit. So that's 10,198 minus 8,000, which gives the profit per month to be 2,198. This concludes the fourth part. Let's move to the fifth one. We're given additional information. So in order to overcome the shortage of skilled labor and also be able to meet maximum demand, the directors are considering paying an overtime premium of 25% and paying a total monthly bonus of 200 to be shared between all workers. Now we need to calculate the total contribution and total profit for the month of December 2021 if the directors decide to carry out this proposal. All right, so what we figured out was we needed 100,080 hours to produce the monthly budgeted outputs, but we are only given 900 hours due to the limited resource, right? So if we already have 900 units, then the remaining hours would be that of 180. So for this 180 hours of direct labor, we will be providing an overtime premium of 25%. So for these 900 hours, we were providing the direct labor hour at the rate of $8 per hour. Now we will be adding a overtime premium of 25%. So that's going to be 8 into 0.25, which gives the premium to be $2 per direct labor hour. And we're also given the bonus of 200, and this bonus will fall under the fixed overhead category. So previously we only had the fixed overhead of 96,000 by 12, but now we also need to add the 200. Let's figure out the total contribution now. So we're talking about the total contribution and total profit for the maximum budgeted outputs. So we can easily start with the total contribution for the maximum units that we figured out in the second part. Let's have a look. So in the second part, the total contribution was 11,640. So we will be starting from this amount. We have 11,640. So this contribution includes the direct labor hour for 1,080 hours. But what we know is that for 180 hours, we need to pay an extra overtime premium. So overtime premium obviously reduces the total contribution. So we need to subtract the overtime premium. So we're paying the premium for 180 hours and the premium is of $2 per hour. So this gives the total overtime premium to be $360. Okay, so if we subtract this value, we get the total required contribution now, which will be 11,640 minus 360, resulting in 11,280. Now we need to subtract the fixed overhead in order to figure out the total profit. So previously we had the fixed overheads of 96,000 by 12, which was 8,000. Now we also need to add the bonus of 200. So this gives the fixed overhead to be 8,200, which needs to be subtracted from the total contribution in order to figure out the total profit. So that's 11,280 minus 8,200, which gives the total profit to be 3,080. This concludes the fifth part. Let's move to the sixth one. We need to explain two disadvantages to a business of offering a bonus payment to its employees. Alright, so when a business is offering a bonus payment, obviously the first disadvantage would be that it increases the expenses, which may reduce the profit. Let's write it down. So increases the expenses, which may reduce the profit. Secondly, it might cause the workers to rush so that they get an extra bonus payment, which may affect the quality of the product negatively. Let's write it down as well. May cause workers to rush, which may affect the quality of the product. Alright, this concludes the sixth part. Let's move to the seventh one. We need to explain two disadvantages to a business of operating a system of budgetary control. So firstly, budgets may be set too high or too unrealistic, which might demotivate the employees. Let's write it down. So budgets may be set too high, which may demotivate the employees. Secondly, some estimates may be inaccurate because budget is basically the estimates of numbers, and that might lead to bad decision making. So let's write it down as well. Some estimates may be inaccurate, which may lead to bad decision making. Alright, this concludes the seventh part as well as this question. If you found this video useful, make sure you leave a like and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.